Welcome back to Phase and Us, you handsome devil. How
Good
are you?
morning. Thank you. Thank you. Good morning.
How's it going with you? You know,
Well,
before we get started with your what you have to say with what's happening here, can you explain to me the strange situation that happened in Libya? I've never heard of a force majeure or production stopping over an argument or a conflict with a central bank. Is that what was
sure.
happening in Libya?
We discussed this in a space that is pinned to my tweet today. I think we were the only one who came up with the secret to all of that. Not a single media outlet was able to get this point. Uh, those guys, we have a government in the east, another government in the west, and they've been fighting with each other. And the government in the east was able to shut down all the oil exports. That was in 2020. Then other governments basically intervened, and they created a system where they divide the revenues through the central bank, and it worked. They were fine. There were no problems at all. All of a sudden, a group from the Haftar group, who is the leader of the militia in the east, went to Sharara field. Sharara field is the largest oil field in Libya, and they closed it down. And we were able to get some statements from the guy in charge who said, well, here is the problem. A Spanish court issued an arrest warrant for Saddam Haftar, who is the son of Khalifa Haftar, who is now the leader of the militia. And they issued this because of arm smuggling. And who manages a Sharara field? Repsol. Repsol is a Spanish oil company that is partially owned by the government. So they thought if they stop its operation, they can put pressure on the government, and the government can put pressure on the court, basically to prevent that arrest and eliminate it. That's how it started. That story did not make any sense to us because everyone knows that an oil company cannot affect the judicial system in a Western country. Then all of a sudden, they decided to close all the fields because the Western government removed the head of the central bank. And they started losing about 125 million, or supposed to lose 125 million dollars a day. No one loses 125 million dollars a day because of the appointment of a certain person. I mean, even two brothers can kill each other over that amount of money. It doesn't make sense.
They would, yeah.
And here is what again, I said we were the only one who said this, and it is in the space that is pinned to my tweet. Here is the story. Why the Biden administration contacted them and told them to open the fields and let the oil flow? Well, you can say, well, the Biden administration does not want higher oil prices before the election.
Yeah.
But there is more to the story than that. All of a sudden, the UN got involved, brought in the two parties together on the spot. I mean, it did not take more than hours. And they have an agreement on who is to hire for the head of the central bank, because the previous head of the central bank ran away to Europe.
Okay.
So why the Biden administration got involved? Why the UN got involved? What's the story here? It turns out that
sounds like Carney. Carney ran away to Europe from Canada.
So yes.
Right.
So here is the story. The UN supposed to vote soon on unfreezing $70 billion of the Libyan sovereign fund that's being frozen in the West,
Gaddafi?
in Europe and the United States. 70 billion.
Since Gaddafi?
So what happened is...
That happened? Has it been frozen that
it's been
long?
frozen since 2011.
Okay, yeah. All
okay?
Right. Yeah.
And the issue here is you are talking about 70 billion. And that under the Libyan sovereign funds, which is under the central bank. So everyone basically wants control of that fund. So yes, you can lose $125 million a day if you are going to get 70 billion.
Got it.
So the issue really is that 70 billion and who is going to get it, how it's going to be, who is going to manage that fund, etc. But here is the sad part of the story, and it's really sad. $30 billion of that fund is in US and West and European banks earning negative interest rate.
Okay. Yeah,
so imagine that. which means that the Libyans are losing $10 to $15 million a day just on that negative interest rate. So the objective of the Libyans right now is really to get hold of that money so they can move that money from negative interest rate to positive interest rate, and they can start making money. Sorry, it's a long answer, but it's a long story.
Anyway. What a convoluted story, man. You know, I mean, people and money, you know, anyway, I believe I understand it. There are so many moving parts to that story now. It's, I'll have to watch the video again, like everyone else. I recommend you listen to this story again. So, technically we had a breakdown in WTI, under 72. It's just a chart. I know, you know, you're not a technician, but this is the kind of a bearish signal that we took out $72. So I know you believe the market is managed. Are we close to the low end of the range, or could we go $60?
Here is the situation. In our main scenario, we assume low economic growth, and OPEC Plus will go with its plan as is. If we end up with a recession, then we move from our low economic growth scenario to a recession scenario, which is completely different from the going sideways in prices, because our assumption was, as you remember from the previous show, we're talking about sideways. Sideways basically assume low economic growth because the recession is a completely different scenario. But here is the situation now, because this is very important. OPEC, we have OPEC Plus. OPEC basically 13 countries. OPEC Plus is 23, so it's OPEC Plus 10. And then we have something we call the Group of 8. The Group of 8 are those members who decided to make voluntary cuts in the last 2 years to stabilize the market. Therefore, all those reports in the media from Reuters, Bloomberg, etc., in the last 2 days talking about OPEC unwinding production, OPEC Plus increasing production, that expression is wrong. It has nothing to do with OPEC Plus, has nothing to do with OPEC. It has to do only with 8 countries out of 23. Okay. We published a report last night on this in details on Substack, and we came up with a name for them. We call them the V8. The V8 V for voluntary cuts.
Yeah.
So the group of V8. So those group of V8 basically agreed months ago that they will unwind the voluntary cuts starting October 2024, and that will be gradual increases over a period of a year. And therefore, they will increase production based on the plan by 180,000 barrels a day in October. Goldman Sachs published a report about a week ago. They ran away with it, and that report is full of mistakes. One of the mistakes basically is they kept talking about OPEC. We passed OPEC since 2016. No one talks about OPEC these days. You want to talk about OPEC Plus? That's fine. You want to talk about the group of 8? They did not even mention the group of 8. They did not even mention the OPEC Plus. When you are an oil analyst and you don't talk about this, you seriously have a serious problem. The other issue is they ignored completely the compensation. What is the compensation? We have 3 countries that violated their quota or exceeded production above production targets in the first 7 months of the year. That's Russia, Iraq, and Kazakhstan. Now, those countries have to compensate for what they increased in the past, and that will be subtracted from the 180. And Goldman Sachs basically ignored that completely, and they ended up bearish, and they contributed to the price decline you are talking about.
Interesting.
So their assessment is completely off because we have the compensation. Now, talking about the compensation, those countries basically dragged their feet because they were trying to play around the system. But the Saudis are not going to like that. So what happened in recent days is very important. We believe that the threat of a price war is real. Okay. And it's real because we've seen it between October 7 and between March 7 and March 9 in 2020. when
Yeah.
they brought the
COVID.
Russians to their knees.
Yeah.
Okay, so this is real, and what we've seen that once it seems like the threat is made, all of a sudden Russia is in compliance, and all of a sudden the Iraqi government is in complete panic, trying to cut production and forcing the Kurds to cut production in the north. We've seen Kazakhstan going for full maintenance programs to lower production. In our report that we published last night, we showed all the data, and we showed the exports declining of all those members.
So you think we're mispriced here? Is that what I'm
Mispriced, and the media basically really misreported the facts. So here is the other issue that is very important to this. If you look at various scenarios facing the group of 8, because yesterday the media was talking about some discussions of delaying that increase in production.
Okay.
If you look at it from various points of views, and you look at it from a game theory point of view, the ultimate outcome for them is the following, is to have Russia, Iraq, and Kazakhstan in compliance, and then they go with the unwinding or the phasing out of voluntary cuts. So they go with the 180 increase on paper. Then you take the production, the compensation from Kazakhstan and Iraq, we end up with about 30,000 oil. 30,000 is nothing in the market.
Yeah.
And that assumes that all the other countries will increase production, which is not true. Goldman Sachs report assumed that there will be no maintenance for a year. There will be no technical issues for a year. That's a complete nonsense.
Did you dig up how many contracts Goldman was short before they released this information?
I don't know. I don't know.
That's just the way my mind works here. Do you think they do that? You think they do that in us as they position themselves ahead of news? Traders will use every advantage possible.
Look, I'm going to tell you a story that I never said before. I'm not going to mention the country. I'm not going to mention name, but I'm talking about an oil producer with a senior official, and I met the son of that official, and I told him, "What do you do?" And he handed me his card, and he was an oil trader.
Okay, got you. All right. So trading opportunities. So for me, to be interested in buying crude again, I see no sign of a bottom yet. But back above 72 would make this look like exactly what you said, that it was misinformation and that the market didn't belong here. And back above 72, you have a breakdown failure.
Let me explain one point, because in our report, we indicated we are talking about kind of a dumbbell situation here. You either get recovery in prices to where we were 10 days ago, or you get prices toward the $40. You don't get something in the middle, because it's either this, either compliance or a price war. There is nothing in the middle.
Okay. Yeah, there is people have been talking 40 long-term targets for a long time. I just want to put that in perspective, because I'd be backing up the truck if that ever happened. And you could see it on the monthly, that as bearish as people are, from the COVID low, all we've really done is correct this huge run that we had into the war. COVID low, Ukraine, and then the initial sell-off, and we're just moving sideways here. So 40 is the new -10 now, right? Because of inflation. Back then we didn't have we had deflationary problems, so it went negative. And now if we have some, go ahead.
I just want to explain this point, because what matters to the market as a minimum is really the marginal cost in the fields. And that's really what determined that minimum. And the marginal cost in the field basically has been increasing. However, that does not mean the price will not go below it. It will go below it, because I tweeted yesterday a very important tweet replying to some analysts who missed the point on this. Natural resource economics is completely different from the economics we learned in Econ 101. Natural resource economics, like oil, is different from manufacturing cars or TVs or microwaves. And everything is different. And if people keep treating oil like a manufactured good, they keep missing the point. So some people were saying, well, the Saudis are losing market share and that's stupid. Look, the US is increasing production. Well, look, in natural resource economics, the Saudis are preserving their natural resources to the future. The US is exhausting its resources. Guess who is going to win in the long term?
Okay.
That's natural resource economics.
Okay. All right. So you preserve your asset instead of just blowing it out so you get cheaper prices politically, give you an edge. That brings me, I do want to touch on that gas, but that does bring me to what you think oil policy is going to be here in the U.S., depending upon who gets elected, even though Kamala says that she has flipped on fracking. I'm wondering what you think is going to be the effect, since we're already producing quite a bit, right? But regulations could be loosened up to get natural gas pipelines in and fracking going again. What do you think under each administration?
There is one fact that we have to deal with. When the oil companies do projects, they do it for 25 years to 50 years.
Okay, like the Chinese do it for 100.
While the elections are every 4 years.
Right.
So this conflict basically is a problem for the oil companies. For example, when gasoline prices increased and the Biden administration relaxed some of the environmental regulations so refineries can increase runs and production, refiners did not like it. They said, look, I spent billions of dollars to meet the environmental regulations and now you relax them and you want me to change again? So the oil companies, the refiners, etc., they don't like those changes every 4 years. And therefore, they are not going to respond strongly to these changes. Okay. So that's number one.
Interesting. Okay.
Number two, I think the Trump is going to be in trouble, not Kamala Harris. Trump is going to be in trouble because he is coming to office with U.S. oil and gas production and LNG production at its highest ever. Can he maintain that? Over 4 years, many people doubt that. And therefore, he is in trouble because of that. He cannot increase it above that. And if they scrap the Inflation Act, if they scrap that, let's say Republicans win the 3 houses and they scrap that, that means all the government subsidies to renewables and
goes away.
Electric vehicles, etc., goes away. What that means? That means immediately an increase in demand for oil and gas.
Right.
An increase in demand for oil and gas means prices will go up. Trump cannot fight that to keep prices low. The other logical comment here is if Trump basically succeeded in lowering prices through the help of foreign countries or others, why you and I are going to invest? Why oil companies are going to expand if prices are low? So he is really more in trouble than Kamala Harris in this case. The third point is extremely important. LNG is now an integral part of the U.S. foreign policy and the U.S. war chest. When we talk about war, we are talking about trade wars and actual war. Look at Ukraine and Europe. And anyone who wants to come to the White House, they cannot do anything to fracking because LNG is part of national security right now.
Interesting. Okay. Do you have a different view on what's happening here in natural gas? I like the look of what it's doing here. We get back above 220. That's going to look pretty good to me. Is it weather related? Is it Europe? Is it Europe that might have problems with natural gas that they didn't last year because they had a mild winter? What do you think is behind what could be a bull move in nat gas?
What we publish a weekly report on natural gas and LNG, and then we publish a tracker of natural gas in Europe every month, which is going to be released today, by the way. And the issue here is we do have to separate U.S. market from the rest of the world. We are bullish on the rest of the world. We are bullish on LNG. The story of LNG is just an amazing story. And we have a big conference coming up in a few days in Houston, which is the conference, basically. It's an international conference, which is GasTech. Just a massive conference. Anyway, the issue here is this, that in the United States, we have a problem where natural gas comes with oil from oil wells in shale plays. When oil prices go up, those producers will dump natural gas on the market at any price, even if it is negative, so they can take advantage of revenues from oil. That's really the problem we have.
Okay.
And natural gas producers in the Marcellus and others, those are producing gas only. Even if they cut production, they cannot solve the problem because the producers in West Texas and others are just dumping the gas at any price. And that's really the issue right here. But in our reports, basically, we indicated that demand, we predicted this, and we were spot on, that natural gas demand, especially with the heat wave in Asia, is going to increase demand. It's going to divert shipments from Europe to Asia, and that's what happened.
Okay. Anything that we should know as far as effects of what's happening in the Middle East?
Well, there was a story a couple of days ago that the Houthis attacked an oil tanker, which is a VLCC, which is one of the largest tankers in the world, called Amjad. That did not make sense to us. We questioned that from the first moment, why the Houthis would attack a Saudi ship. But if they attacked it, well, they did. And the reason why we believed it at first, because it came from the U.S. Central Command. It did not come from the media. The U.S. Central Command basically said this. And then later on, we found out that there was nothing wrong with the ship. It was another ship that's been attacked next to it. And then we questioned what the Central Command basically looked at. And it turns out a very simple procedure. If the captain calls and says, or send an email, said, we are under attack, they assume that the ship been attacked. And the area was under attack, so probably the captain of Amjad said something. I posted a tweet this morning with a map where Amjad was, and it is very close to its destination in Egypt. It will arrive late this afternoon, so definitely there is nothing wrong with it. So that's number one. Number two, ExxonMobil released its outlook to 2050 last week, and I don't know how much time we have left, but the idea here is please ignore this outlook. And the reason why ignore it, because this is a PR outlook, has nothing to do with investment, has nothing to do with trade. Exxon basically has several scenarios. They take the scenario they want to invest according to, and that remains secret. No one knows that except the officials of Exxon. And then they choose one for public relations to please the environmentalists, to please certain politicians, at the same time send messages to politicians and others. And that's what they did. And if you look at the details of it, for example, they have a scenario where it is replying directly to the IEA and the UN. Well, if you are talking about a true outlook, you don't reply to the rhetoric and the propaganda of the IEA and the UN. So it is clearly a PR. So what they said basically is, if we today stop investing, the decline rates in the fields will be 15%, and therefore oil production is going to drop substantially in the coming years. So that's number one. Number two, they expected oil demand to plateau in the mid-30s and demand basically to be around 100 million barrels a day by 2050. Well, we are by next year we'll be at 107. So that's number one. Number two, if you look at their assumptions, which is kind of a hidden assumption, it's kind of very weird, because for the last 5 years we've been saying that we need at least 700 million electric vehicles. And I said this on your show before. We need at least 700 million vehicles to have 100 million by 2050. We're the only one who is saying that. And now ExxonMobil is saying we need at least 900 million.
Wow.
Here is the issue. We have only about 50 million right now. In the next 25 years, we need to add about 900 million electric vehicles. But this is not the story. The story is in the next 25 years, the fleet is going to be exchanged at least 3 times, which means that I need 1.4 billion with B, electric vehicles in the next 25 years. And that's impossible to happen. And therefore, oil demand is going to grow. Oil demand is going to be higher than any forecast right now.
What a great interview once again, Anas. I just posted your handle on X. Anywhere else you want people could go to check out your research. If you're a WTI, you're an energy trader, you have to know what Anas knows and
yes,
shares.
so we have 2 publications. We have the Daily Energy Report, both of them with subscription. And for institutional investors, we have the newsletter. The links are in my bio on Twitter.
All right, Anas, thank you so much. How long have we been doing this together, my friend?
It's been a few years.
All right.
I always enjoyed it.
So I look forward to seeing you every quarter and appreciate you being able to explain complex things so that we could all get it, and appreciate that you have been here all this time edifying our community about the lifeblood.
Thank you. If you don't mind allowing me just to mention one thing. In the Daily Energy Report, we do something that no one else does, which means that we take the news items and literally explain to people things that no one discusses. Say, this news is fake. This news, for example, is irrelevant. Or this news, here are the implications and what it means and why they said it. So that's for the Daily Energy Report, and I think people will enjoy that.
That's more important than ever, because I think that we've reached a point where a lot of people, and I'll admit it, sometimes I don't know what to believe anymore. Anas, we've gotten to this point with so many different narratives and conspiracy stories and just people trying to manipulate our minds with information, that for you to curate this information is so important, that you have someone that's an expert that could see through the bullshit. Pardon my French.
Thank you.
And anyway, Anas, I appreciate the relationship with you. And till next time, it'll probably be in December. Inshallah, my friend.
Inshallah.
Anas El-Haji, everybody. I posted his handle in text. Follow him and become more knowledgeable about energy. It can't not happen if you read his stuff. That's a wrap. Thanks again, buddy. And you could join the team in 15 minutes on the Morning Edge. You're welcome, guys. Have a good day in the market. Looks like the dollar's trying to bounce here. And I'll see everyone. We'll wrap it up. Hey, Sung Yup, be here tomorrow. Trade the NFP live with us. Best place to, get some real good input to the reaction of it. Hasta mañana, Laura. See you guys. Oh, yeah, I forgot. Don't just count your oil wells and wheat silos. Count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.